Good morning, good morning, good morning, and apologies for being slightly late. We had a tiny technical issue now, but all solved. So it's Thursday morning, so it can only be Coffee Kickstarter with Property Angels and for our business mini series with Fiona Talbot. So Property Angels was founded by a former solicitor, former accountant, and former police detective who saw the need to professionalise the industry. Using their knowledge, experience, and proven track record, they endeavour to guide, support, and help those new to property by providing them with practical knowledge, practical tools, and skills to enable them to thrive in a safe manner. Now, the Coffee Kickstarter series, that aims to inspire both those new and established in the property business by sharing real life stories, real life experiences, and real life journeys from coalface practitioners. The business special series we're running with Fiona is helping you make sure your business is fit, talking about challenges you might encounter and how to overcome them during these tough, unprecedented times. So welcome everyone, and thank you for joining us. So Sam, would you like to introduce yourself?
Thanks, Karen. Oh, excuse me. Sam Beddoe. I've been involved in property probably about 6 years now, full-time. Prior to that, I had a career as a police detective for 23 years, so quite a contrast to what I'm doing now. I've got experience in a variety of property models, be that buy-to-lets, HMOs, rent-to-rent HMOs, rent-to-rent service accommodation, commercial conversion, working with joint venture partners, working with investors, using SaaS pension funds to buy property, auctions, title splits, refurbs, quite a variety there. And I've settled on, I've got a service accommodation business and a development business, and I'm buying a couple of properties at the moment. And also we've got Sarah, who's one of the property angels as well. She's on maternity leave at the moment, but just let me tell you a little bit about Sarah. So Sarah was the one who was the solicitor, and she's been in property probably about 16 years now. Not all of that full time, so she was running her career as well as being a property investor for a lot of that time as well. And Sarah's done a variety of property models too, and her main focus now is a small portfolio of HMOs and mainly buy-to-lets. The reason she's done that is, as I say, she's on maternity leave, so she wanted to streamline that and make it as simplistic as possible so that she's got as much time as she wants to be on her maternity leave and make her property business as hands-free as it possibly can be. And that's working really well for her. She's spent a number of years trying to get to that point of ease with her property business. Sarah will be back joining us as soon as she's able to, but obviously we all appreciate maternity leave. It goes so quickly, so you have to make the most of that time with your little baby while you can. So that's a bit about me and a bit about Sarah. And yeah, we've got Fiona with us today, which is fantastic. After the great response from last time, with the flurry of questions that we had and interaction on the day was amazing, and then it continued for the rest of the week, didn't it, with all the questions that were coming in. And thank you so much, Fiona, for answering all those questions in the week as well, so that people could get the feedback from the wealth of your experience.
Great, well, thanks for having me. And before we get started, I wanted to ask a very important question to you two ladies. Very important. So this is called the Coffee Kickstarter. Why do I have my coffee and I never see you two drinking coffee? Okay, there we go. Just wanted to check, it's going to have to check up on you.
No, that's brilliant. Fiona, there's some new people that weren't with us last time. Do you just briefly want to recap about yourself and your background, just so everyone knows where you've come from and how you've got to where you are today?
I run a East Anglian-based property investment company, Propco, and I've been running that since 1998, so 22 going on to 3 years. My parents were landlords back in Australia, so I was often, and a lot of property sold at auction there on the doorsteps of the property. So as a child, I was often sort of dragged along on Saturday mornings to auctions where they might have been bidding on properties. And they had a 30-year investing career, and they bought about 5 flats during that time. So they buy one, cash that out. So they favour the unencumbered model, buy another one, cash that out, and so on and so forth. They call that leapfrogging. So 30 years, 5 properties. That's not the model that I follow. I follow a combination of cash, asset, and leverage compounding. So I've been operating, as I said, for I'm in my 3rd decade of property investing. I've seen it all. Know where the bodies are buried, so to speak. Know what strategies used to work, what that no longer work, what's now illegal. So on and so forth. Great strategy called cashback on completion in the sort of 2003 era. That was a great way to buy. And that's another key thing. It's like, I consider myself a first mover advantage person. I like to be forward facing and looking at what's the new strategies unfolding. And I see some of the training that's going on. I think, well, these are slightly less current strategies out there being trained. So I often take some great amusement in finding out with the strategies I might be doing now, how long those will take to get into the training. I was doing HMO in 2008, and I do wish I'd sort of doing some training at HMO, because that's been such a popular strategy. I've been doing serviced accommodation. I'd gladly exited it by the time it became a popular strategy as well. So, I've got a couple of strategies at the moment that I think are fairly unique to the marketplace that I'm using. And the interesting thing about my business, so there's I have 6 full-time staff and various contractors, is that we're self-funding. So, our growth capital comes from either equity, tapping into the equity of the existing assets, or assets that create the income, and we manage that process using that income for reinvestment. So, and some money partnering work where people lend us money on a simple interest basis with asset-backed security. So that's our growth strategy. And I believe in the operational side is the key. And so we only manage, we're self-managed. So we only buy where we can control the operations. So I don't sort of tend to buy further than about an hour from the office. I know there's certain elements now that are getting easier and easier, but that's been how we've operated, at least for the last sort of 20 to 23 years. And I'm a mixed strategy investor. I'm going quite heavy into commercial now. Doing a deal at the moment for a city centre commercial building with 2 shops, 2 flats, and a development plot in the car park for 4 flats. And I'm also buying a flat. So since you saw me last week, I've had my funding agreed on on the 3 flats, 2 shops as well. So that's good. I'm buying part of it. I'm doing a title split. Part of it I'm buying for cash, and part of it I'm getting financing on. So we spoke last week, and luckily that's come through on Tuesday. So hopefully we'll get that put through before Christmas. Yeah, and I'm a property bore. If you start asking questions about property, I don't shut up, as you know. I can talk for days on my favourite subject, property investing. It's not a means to an end for me. I've had financial freedom since I was 30. I'm certainly not 30 anymore. I want to carry on growing and asset building my business. I'm pretty clear on that.
No, that's really cool. I've got an opener question actually from Fiona before Sam jumps in with the next question. Fiona asked me to think about this, and she's going to give some thoughts on this. And it's like we've gone back into lockdown number 2. So what is your mission, your intention for the month, and why is it so important? So over to you, Fiona.
Yeah, something I try and do. I like to think, what's the outcome I want to get from this conversation or this whatever I'm going into. I find that a really easy way now to sort of deal with certain situations, especially like, when I have various staff meetings, what's the outcome I need from this meeting? And I looked at the lockdown we're just going into. The housing is still open, so it doesn't really feel like much of a lockdown. My kids will still be going to school. And I thought, what is it that I want to get from this next lockdown? So I had a little bit of an issue in the last week with HSBC. If anyone follows me on Facebook, they froze one of my business bank accounts. I've got 17, but they chose the one that I pay my payroll out of because the letter was returned from my office. So it was a Royal Mail issue. And then, but that's okay, I understand that fraud issue, but then there was like no means to actually get it unblocked because the left hand didn't know what the right hand was doing. So eventually I got it unblocked, but it made me think, I've been thinking for a while, I need to look at private banking. So I'm going to spend lockdown furthering my, and I know that that's an opportunity that's open to me, is possibly moving my business banking over to business banking. I want to lose a stone. Health and wellbeing is so important. Energy as well. I want to lose a stone. That's a personal goal. Just tidy up some of the back office in the business side, and so I work with the staff to. I've obviously done a lot of video tours now. Maybe developing that part of the business as well. So I don't like to over task myself, because I find that it's easier to focus on, say, 4 key things. And then if you have bandwidth, it's easy enough to find something else rather than going into it with a whole load of tasks and then feel guilty if you don't manage to achieve that. So I use the word mission when it comes to business and intention when it comes to personal things. So a lot of people talk about your intention. So my mission is sort of that. So if anybody wants to share in the comments below what their mission is going to be for lockdown, I don't really have a problem. Some of my Australian friends have been messaging saying, we'll be okay. And I think, if it's a little bit, I've had quite a busy 7 months, and I've got 7 properties turning over this month. I've got 3 officers that are given notice. I've got purchases, business as usual for me, really. And that keeps me busy anyway. So, and I'm also on the Oxford trial for COVID testing. So I had my first one yesterday. So I'll be getting tested weekly as well.
Okay. So the lessons that you learned from the last lockdown, what ones will you be continuing to apply? Is there anything different that you're going to be doing this time with your portfolio of existing tenants, commercial and residential?
So I will, so we've already had November's rents have come through, as you know, we're at the 5th, and we've had very little arrears. We're bringing in a few little policies. So we're having some of our tenants moving to universal credit, and we sort of said as policy we want that paid direct. So we did our first one. I have a financial controller that works for me, and she did that first one. So, and just being communicative with the tenants. Some of the tips, some of the things we brought in the first lockdown, we basically communicated. We were sending regular emails out to our tenant base saying, it's a bit nicer than this, but you're protected from eviction, yes, but we report to Experian, and we will continue to report unless you agree a payment plan with us if you do find yourself starting to struggle. So we just continue some more of those policies, and being on, if rents are late, we stick to our standard procedures. We're not flexing just because of COVID. If rents are late, they get contacted as they would do. We try and keep an open communication with them, and only doing viewings where necessary. And I'm becoming a big fan of a homeowning guarantor. I still have some rooms. I've largely exited HMOs, started that process in 2018, but I still have some rooms. But this is a process, and we haven't completed the process. And now we're sort of saying, you know what, we'd almost rather have the room sit empty if we can't get a person with a homeowning guarantor. And what's becoming interesting is the more we're asking for that, the more they're finding guarantors. So that's been interesting as well. So yeah, and for housing as well. We just rented a house this week, and we're really paying attention to where our tenants are coming from, and they're in the military, so their rent's provided by the military. It's housing allowance, so that's good as well. But we did that in the first lockdown. We kind of looked across our tenant base and said, right, we largely were working professionals. So I did have somebody email and say, oh, I'm curious why you're asking for a guarantor. I'm on 44,000 a year. And I thought, yeah, but it only takes like one conversation with your boss. So because, you know, these are times that you've got to tread carefully as well. If they think serious arrears is 12 months, that's quite, you know, no pun intended, serious, because, you know, smaller landlords cannot survive without receiving rent for 12 months. I saw someone in a forum who posted they had owed £19,000 from a tenant, and I thought, that poor person. You know, people wouldn't be too happy if their salaries weren't paid for 10, 11, 12. You know, I would never think to do that with my own staff. Pay late, not pay. So
yeah, and you're doing video viewings as well, did you say?
We don't do video viewings. We record a walkthrough video, which we send to them, simply because the internet doesn't seem to work very well in empty properties. So, and we're not, my area, every area in the UK is experiencing something different, but my area, it's very high demand for anything that comes up. We're seeing very high demand. So we're not in London, we're an hour from London. So we are a city, but we're a small city and in farming area. So we're seeing, I put a 2-bed up in July, or we did, and I sound like I do all the actual dirty work, I actually don't. And I just want to take credit for my team's work. And we had 12 applications for just a bog standard 2-bed. So yeah.
Okay.
So that's awesome. And I have got something I wanted to ask you, but given where we are right now, what's probably more pertinent is to talk to you about reserves and rules, because that's very related to protecting your business, following on from what Sam's just asked you. So how do you manage your reserves and what rules do you put in place?
So I have been keen on always so when I first started out in property, early stage investor, you know, any lumps of capital I had were deposits for a house. That's just standard. And you spend your time hustling for additional sources of deposits. That's the way you are. And then as your business kind of grows and matures, you start to think more about, you know, keeping it safe and more of the business back office stuff, the boring stuff. And unless you're like me, you don't actually find it that boring. And all it takes is the first cash crunch to sharpen the focus. And for me, that happened in 2012 when my former accountant made a tax calculation error, not in my favor, and incorrectly, I had to pay a serious amount of tax quickly without warning. And that's another thing, as your business grows, you find you spend a lot of time fixing other people's mistakes. And then you start to get to the point where you're almost like trying to forecast and be very careful, because, you know, sometimes businesses can go down because of other people's actions, not the person that's running it. But then again, it's about how we respond to that. So anyway, so I had my business cash crunch in 2012, and, you know, I didn't like it. And despite the fact that it came back round and I got a large amount of that money back again, I just didn't like that feeling. So I started with just putting money away. And it's only been probably in the last year, 2 years that I've really paid attention and formalized. So we use should I pull my trusty whiteboard over again?
On then.
Yeah, I get teased a lot about my whiteboards. It's too far, I had to get up this time. At least, you know, I'm not wearing tracksuit bottoms, or, you know. So we use, and this is just how we do it. Obviously, open to how anybody else might do it. We use a simple 4-account system. So we have our sort of current account or our business account for. So I have various entities. I'm across a couple of different entities. So each one, you know, is following this. This is the current account where kind of, you know, your funds come in. So my money comes in net of management fee into my account one. Then I have a repair and maintenance reserve. And for us, that's 5%. We put 5% in there. And repair and maintenance reserve, that includes emergencies as well. So we just stick it into the same one. Then we have a working capital. It's funny, this was inspired by the book Profit First, because he's got his target allocation. So I was already putting money away, but then I actually formalized it last year a bit more when I read Profit First about that percentage allocation. Now this isn't a set percentage, because it's almost like we make a decision at a certain point in the month of what's then surplus net profit. Then we put that in there. And that helps me with my working capital planning for acquisition. So I don't want to be trying to plan on one, using one's money. I want to be planning on using what's in three. And then we have what we call a tier account. Tier account, want to guess what that is? What tier stands for? Aside from it being a nice lady's name.
Tax, interest, and something else.
So we tax, insurance,
insurance.
and accounting. So my accounting bill is like over 20,000 just from doing my year-end accounts. So we actually reserve for tax planning and for tax planning and accountancy there. So as I said, it's just how we do it. Everybody's, businesses do it different ways. But that way we feel like everything's being covered. So, and account one, regular bills come out of. And of course, I'm focused on the balance of account three, because that's our growth capital. So just see if anyone's got anyone's got any questions on that. Not really. It's tricky to look at that at the same time.
Particularly.
No questions? Okay, so there you go.
No, that's really good. I like that. It's a really prudent approach, and it makes sure your arse is covered, and it makes sure that at the end of the year, you haven't got a massive hit, say, on portfolio insurance, accounting fees, etc., etc. Because if you haven't provided for them throughout the year, that can be quite a substantial cost.
Oh, it is. I mean, my portfolio insurance is 5 figures, so as well as accounting and so on. And for me, it just helps me understand. If you ever read the Profit First concept, it's about knowing, where your profit is. For me, my core is at my growth capital. Where's that coming from? How much is it? How, and I want to be punchy in terms of, I don't want to go, oh, I've managed to save 80K in 3 months, so I'm going to go and get a deposit. I want to actually be able to calculate, I'll be running about a month behind in terms of what I know is building up in that account, because obviously, if it takes me time to realize, then to find the property, then to close on the property, because we know this isn't a quick process. We make it as quick as we can as property investors, and probably quicker than retail buyers, but it still takes some time. Then I know what I'm working with. And I also know I've got, reserves for rainy day as well. So
it's a solid approach. I like that. That's really good. I do reserve, not as cleanly as you do, I've got to say, but I do have reserve accounts for various things.
Yeah, this has just evolved. And though we would then in theory have a large amount of costs being put aside, we would never drain our working capital to zero either. So that's where I'd sort of say, right, I kind of got an awareness of how much we need to have. And then it's almost like I have different lines of defense too. So I've talked last week about cash assets and how I bought that into my investing line 7 years ago, maybe 8 years ago, starting to also to purchase and hold cash assets. And I hold a certain percentage of the balance sheet in cash assets as well, so that I can quickly, put security on that if I need to raise money. And sometimes I'll raise money on cash asset A and I'll actually deploy it into asset B, and B might have a nuance to it. There might be some secondary funding on it as well. So I don't really want to be giving multiple charges on asset B. So it's a great lever when you can get to that point. It took me, some time to get there. So
have you got a percentage on the working capital that it will never go below?
It's not a percentage. Normally it's a number. Okay. And it's usually, I just have a sort of comfort level of where I want to. I mean, I used to think I was getting a bit conservative I really did. I genuinely started thinking, I could buy another so much in property with what I'm sort of sitting on. And then COVID hit. And I thought, actually, you know what, Fiona, your conservatism's founded. So, yeah. But that's just my nature anyway. I'm always sort of like, you know, I had a quite fairly difficult childhood, so I've always got to kind of watch your back type mentality towards things. Business isn't fair. I see a lot of things posted. Business isn't fair. It's not a straight line. You know, things can happen. And we see how many people the government have left out in their support scheme. It's just not fair. It's not, you know, you can't go into business life thinking it's always going to be fair and just. You sometimes, and you know, some of the things they've done to landlords in the last few years also certainly wouldn't be fair. So that's another thing to always think, to be thinking in the back of your mind is how, you know, who can come at me? What can they do to me? I want to be business strong. You know, I want to be business strong, and the more I scale, because I also want to grow, so I don't want to be so conservative I'm restricting growth. So that balance, that sort of dance between growth and strength and reserving is a fine line, and that's very personal to you and how you feel about you know, business and life and yourself and so on and so forth.
How would that work for somebody starting out then? Because in effect, those bank accounts are a bit like pots of money, aren't they? Safeguards. Somebody starting out who wants to maximise as much money as possible, but they still need to be prudent. What would you recommend they do?
Well, I think, you know, if you have only got one or two or a small portfolio and you know what your mortgages are going to be for those, you should always at least have 1-2 months worth of mortgage payments put somewhere. And, you know, and also somewhere you can access. So I've got a SAS pension, but I resisted putting large lumps of cash into that because obviously if I need it, I still can't, you know, it'd be very difficult for me to access it.
Yeah.
And so, you know, just it's a mindset anyway, and it can start with, I mean, I teach my children to put a little bit of money away and have more than one bank account. And so it's a mindset around, you know, what's the worst that can happen? What's the nuclear scenario? So if it's a business that depends on you and something happens to you, and I speak from experience spending 5 months on crutches only a few years ago. Luckily, my business carried on. It was robust, and obviously, I was still going to work in crutches and all the rest of it. But you know, then what's your backup? Always just thinking, well, what if this goes wrong? What do I do? What if the tenant in my one buy-to-let can't pay their mortgage? Have I got enough money to pay it? If I don't, I need to save 2 or 3 months. Well, nowadays with COVID, probably 6 to 8 months. Do I have cars I can access in emergency? You know, always thinking about the different monies you can access. So for me, I've got cash at bank, I've got shares, not ideal, wouldn't want to access those. You know, I've got lines of credit I can access, I've got cash assets I can access, I've got various gates I can knock through if I needed to, if something sort of quite serious happened. And I think black boxing COVID for people, like for example, if you were surprised about lockdown 2, you need to, you know, really think about it, because I saw that coming from probably August. So I've been preparing for a second lockdown, came a little bit later than I was expecting. It's not really very different for us as a business because we're all working, just the fact we're all working remotely. We're still, and you know, just resisting, we're pre-vetting people before we do in-person viewings and things like that. But, you know, I just try to be as forward focusing as you can in your business. And then also, if you haven't got a lot of means, you know, how can you be financially strong? Is that kind of what you're saying? How can I be financially strong if I haven't got a lot of money? I mean, it's a tricky one, but just, you know, maybe for every £100 you have, try and set, even if it's £1 aside or £2 or something like that. Because I've seen it so often in the property. I've seen people go down in the property world over these 2-3 decades, and they escalate up to a bigger and bigger and better deal. And then that deal up here sinks them. Instead of having 3 or 4 of those, a smaller level going, and then this deal goes, but we've still got these one and this one, you know, and you don't sink yourself. So no deal. I never do any deal that would ever jeopardize my entire operation. So
now that makes real sense, actually, being prudent, covering the downside, and yeah, putting all of your eggs in one basket. That is where people get their backsides burnt. Totally get that. So Fiona, let's talk about some of the operational hacks you use in everyday business and how other people might benefit from them.
Okay, so I use Xero. We use Arthur Property Management System because we're not an agent. So, and that links to Xero. So it auto updates or whatever it's called, syncs and posts entries to Xero. Just trying to think in any particular area, financial reporting, property management.
I think actually property management, health and safety, so people get warnings, and I know Arthur will cover that, but if you talk about how you do it, so they get warnings on what's due, when it's due, but also warnings immediately when say rent is late. Operational hacks perhaps to highlight opportunities in a given area, and also opportunity hacks for finance management.
Okay, so in terms of certificates, gas safety, you're correct. Arthur you can run reports and it will alert you. Another thing we were doing with our HMO inspections is we're actually putting them on as a certificate. So it would also remind us that the monthly inspections due, and obviously we had to still do those during COVID. All safety inspections were still carried out. What was the next one?
So financially, to ensure you know if you've got a problem with a given asset.
Yeah, tenant rent. So we collect via direct debit. So it tells us if a direct debit's failed. So
and non-performing assets as well, continuing from that.
Non-performing assets. So I mean, I would firstly, what is a non-performing asset to me? Possibly one whose net yield against its value is less than 1%. I mean, I always take I know I have a few of those, but they may be my Mayfair and Park Lanes. So I know that I've still got strong capital. You know, that's where you start thinking in portfolio level. I have had people in the past say to me, oh, you know, you could take that capital, put it elsewhere. But there were never people that were captaining a ship of assets that ever said that to me. They tended to be financial people that only saw it for the numbers. Because I try and see, you know, it in 3D, that it's not just about the money. It's about, you know, that could go up 100K in the next 5 years or 8 years, and you want me to sell it, so I'll make another 60K in rent or 40K, really. Let's be real. And you know, I like to say this. You squeezed it out of me. I like them. Some of my assets, I like them. I'm not going to sell them. They're like my children. So, yeah.
That is
I
great.
make the acquisition and disposal decisions in my business, and most of my staff and everyone know not to mess with me on that.
Yeah,
That's my area. That's why they keep me around.
Now, you're right. Cash is always king. But when you get to where you've got to, sometimes having values that are going to increase significantly in capital, as long as they're not losing tons of money, it balances your portfolio. But that's when you start taking a different view, because you're looking at your overarching wealth planning, right?
And we're talking underperforming. I don't have any that net cash flow loss.
Yeah.
So mine will just underperform. So and don't forget that you've got frictional costs anyway. So I might think, oh, that's not so that, you know, that house is only netting me a couple of hundred a month, and it's got quite a lot of equity in it. But actually, by the time I sell it and realize that, pay tax on that, which is a big thing that I get to deal with all the time, and then redeploy the funds. I've lost some, and I might have a good rate on that property as well, and redeploy it, and all that energy and effort. I'm a really big fan of, I use the phrase momentum investing, and, you know, simplify to multiply. That doesn't really fit if I'm fiddling a lot with everything. That, you know, that doesn't really fit with that my strategic goal of driving the big asset tanker and just carrying on growing it. So if I see something that does it, there are some assets that over the years have given me pain points, and I will move them on if I need to. Yeah, so, and it's a tricky one, operation, just going back to, because I love hacks. I think you want to grow a business and scale, being a fan of hacks it does work. You know, I don't know if it's a hack, but I read a fantastic book called Traction. Gino Wickman wrote, and this is about 2 or 3 years ago, and I implemented his style of operational meetings. With that on Monday, really sets the pivot for the week with the staff, and that's a hack, I guess. I mean, the framework in which we do, you know, we run that meeting, and yeah, tell me an area and I'll tell you how I've hacked it.
Just going back to the portfolio, Fiona.
Yeah.
How frequently do you put a review on a property, accepting that some of them are your children, but how often do you review them, and how often would you recommend people look at their portfolio and analyze it, you know, coldly, without emotion, analyze it? Is this one working still?
So I, many years ago, I was away at a campsite. We decided to go on a last minute holiday. So I think it was like 8-10 years ago. And I remember saying to my husband, can I just have a couple of hours? I want to sit and just have some thinking time. And he kindly went and distracted the boys with something. They were quite young back then. And I sat with my laptop. I remember this caravan park, and we never stayed at a caravan park before. It was actually really good. And because it was just the last one, it was all we could book. It was August. And I did my first ever optimization plan. I used to call it the caravan plan after the fact. I did the first one, but it's really an optimization plan, where I sat and I looked through everything. And when I did ran the Marbella retreat, actually, I bought this in. We would have a night where we'd go through optimization. So, because it's not just about, you know, we all try and seek out the non-performance, the underperformance, but we also should think about where it might be working okay or even good, but how can we optimize it, make it even better? And I can't remember the number now, it was many years ago, but it was something like another $8,000 a month in revenue. So as a combination, I think it's like, you know, what costs can I cut? What revenue can I increase? And what, you know, what I had some outbuildings behind a HMO, I can rent those out. £80 a month each, not loads, not going to retire on it, but it all adds up, these little bricks, you know, this £80 here, this £100 this up. And I went through and I plotted this all out. It was the first time you think I'd be really happy, but I was more like, why have I not been doing this more often? So then I started to do it annually. And every time I found money, every time. So now I try and do it regularly because I always find money. And I actually really enjoy it in a perverse way as well, because it's like I'll go into the business and I'm trying to find ways to and I've kind of got the staff on board now. They get in, and you know, they get into trying to do. We have a whiteboard where we put our optimization tips and techniques, and you know what we've come up with as well. So I definitely think that's something people should be doing. And you know yourselves, you're going through your own bank accounts, finding those little drips, those little standing orders of things that you don't really need, and clearing them out. And the bigger you get, the more of those that seem to hide out of sight. So, and it's just having a good practice. So I do that quite regularly. And I incorporated last year. So I would say that was in September. So I'd say that's probably the last time I've done a significant portfolio review, because I probably do that annually. I'll go through my property control spreadsheet. So really would obviously, if you've got more than a couple of properties, you would be maintaining a property control spreadsheet. And I go through my property control spreadsheet and just update the values, maybe have a look at what each of them are doing. So, but I buy very carefully and I buy for life most of the time. So I'm very familiar with my assets. I'm almost like my herd of houses, my sheep, you know, I know which ones might be a little bit sick, and I think, oh, kind of trick, kind of bring them round, and sometimes they do. Got one at the moment I brought round. It was really underperforming last year, and I brought it round. It's doing really well. So, you know, just because it's old and sick doesn't mean I have to get rid of it. I can like take care of it and fix it. You guys are finding out all sorts of weird things about me today, aren't you?
Now listen, look, we've had a this is from last time, and it was something we said we'd answer as a question. So a chap posted a question to us just to answer last time, which we didn't get to, and it was around, he comes from a construction background, he's got tons of solid construction experience. His concern is, how does he attract people to invest with him? So he's got access to the deals, he's got access to, you know, the teams, the trades. Where he isn't sure is on the you know, investor attraction side. Is there anything you'd recommend to him knowledge wise, any training to do, any books to read to gain confidence and experience in that area?
I mean, that's a tricky one for me, because I famously said I started in my mid-20s, and I felt overlooked largely for the first decade or so of my property investing career, because I was a, you know, chassis Australian girl, and I could see these people with, you know, really what I would consider a lot less experience, but maybe quite dynamic and good talkers, receiving sort of all that investing attention. And nerdy, diligent Fiona was largely, I sort of just made my peace with it and worked my way through. And then I got to the point where I possibly didn't need it, you know, and or I don't need it, so I solved it myself. But I'm not saying that's the right way to operate, because, you know, business is a people thing. You do need to work with others, and it can help leverage you. But I mean, I think people are always attracted to people that know what they're talking about, that are educated, and that don't try and bullshit them either, you know, that are, you know, quite transparent and act with integrity. You know, I don't network in the property community now. I'm in business, I do business training, and I network in the business community. So whether or not that's a place that this person could then look to, sounds like he needs a good partner for the other side of what he's good at, whether or not he wants to grow a business with somebody else or not. But, you know, maybe networking, and also be very careful choosing that partner, maybe do some projects together first. I mean, you ladies are out there in various property communities. Would you have any advice for this gentleman?
I think it's tough. Sam's probably got a lot more to say on this, but for me, it's about know, liking and trusting. I'm a bit direct, and I don't suffer fools too gladly. Okay. So, and I've been told multiple times my baseline is too high, but I don't see it as that. I see it as, if you want to work with me, that's the level I expect from you, and I don't want substandard stuff. Yeah. You know, I'm quite clear on what, you know, my intent is and what my expectations are. And lots of people talk a really good talk, but they fail to deliver. So just because somebody's your friend doesn't mean you're going to work well with them. You need to see what they're like in a working environment, and perhaps just dip your toe in to start with. Don't go all in, because quite often you are disappointed. You need to really understand those people, or that person has the same work ethos as you, because it is challenging out there. Like you say, some people can just attract people. They talk, they sell, they sound amazing.
Peacocks is what I call them. That's not to say that there's not competent people out there too, you know, who are out there doing training and all the rest of it. There definitely are. So, yeah.
I've had a variety of joint venture partners. Some of them have worked really, really well, and some of them have been absolute hell, where significant amounts of money have been lost. So we find on lots of these training programs that you're encouraged to jump in with a JV partner that you've known about 10 minutes and they seem really nice. But like Karen said, I think you need to take your time with people. It's almost stand at the side and see how they are with other people. How do they behave with everyone, not just the person that they're trying to joint venture with, but how do they deal with everyone, even, you know, the waiter or
Yeah.
somebody that is not going to make an impact on them? Do they treat everyone nicely or just some people nicely?
But it's also, it's not how they act when the sun's shining, it's how they act when the thunderclouds roll in and their things start sliding, and they've got to get in there and make that deal, sort that deal out, not run for the hills crying, with their hands over their eyes. That's the thing that gets me as well. I've had various opportunities to partner with people over the years as I was growing, they would never outwork me. That was the problem. And so some stories there. But also, one of the things that I find is, going back to that gentleman's question, understand securitization. So many property investors do not understand how securitization works and how, first charge, second charge, what rankings, what actually works, how much, restrictions, are they really worth the paper they're printed on, stuff like that. That is another thing. And even if you're, got skills, you don't have money necessarily. I mean, money often is the easiest part, ironically, but it's just understanding how the deal should be structured and how you can protect any investor's money, because that is important. And it's another thing I see in the industry. It's like when the deal goes south, oh, well, it's because the deal went south. Instead of getting in there and fighting to make that deal work and return that, what you've promised that investor, and don't overpromise either. Make sure it's a fair and balanced arrangement, and then get that sorted. I've got some people that I've borrowed money off for years, always paid monthly, always secured correctly, and they've had their monies returned, and they keep relending. And then I log on the internet, and within 5 minutes I can find, stories of people owed money, people that have lent money. These poor people that might have lent their life savings, and never lend your life savings. Don't do that. And really, in trouble. And I worry about it at the moment because of the fact that saving rates are so low. People will be lending money to the wrong pair of hands. So.
Yeah, it's true. Some people sell themselves so well and they hook you in. And it's funny, I wrote an article about this the other day. It was around the fact that people look at the number, the return they're getting on their investment, but they're not actually looking at, like you said, the securitization. Safer might be somewhere between 2.5% to 5%, because there's real substance behind that person actually offering that money, the securitization stronger, and the knowledge they might learn by actually lending the money to that person, who might then generously share knowledge with them and help them on their own investment journey. But instead, they get attracted to the 12%, the 15%, the 20%, because it sounds great and other people are jumping in there. And it's all about how it's being sold to them. And it's so risky. They don't understand the risk and reward concept. We haven't got time to do a deep dive into that today, but ladies, what do what's your thoughts on that? The actual return offered.
It's got to be realistic, hasn't it? And not, people almost need to, if you're an investor, you need to be thinking, is this sound too good to be true? Because often it is.
And don't, as the person doing the deal, the conductor of the deal, don't give away too much. Obviously, you might not be able to deliver on what you've promised. And that, one of the things I used to do is I used to work with, I call them money partners back in the day, simple interest agreement, always paid monthly as well. It's interesting. I never even considered this rolled up concept where you pay them at the end, because how would they know whether things were going wrong if, you don't pay them anything for 18 months. But I suppose I've got a portfolio so I can pay through other means than potentially. But anyway, so pay monthly. And I always had this funny thing. I always pay 1 month early, pay them back a month early and in full to foster goodwill. So I really, I was so grateful when I was working with these money partners or angel investors, whatever you want to call them. I was so grateful for them to lend me money to help me in my growing. And I was so careful to be sure that I would always deliver that. And it sort of really irritates me almost seeing the disregard that I think some investors are, not everybody, and I'm talking about sort of probably the sidelines, and maybe the horror stories are what we hear, but that disregard that people have for investors' funds now in the community, it's just disappointing. Because my mother lent somebody money, my 77-year-old mother, you know, she decided to lend someone 100,000, 150,000 on good faith, I would like to think that they would then repay her as promised in good faith also. So, you know, did we have any questions in the comments? I'm not.
We've got a lot of questions, but we haven't got time to answer them all today.
Questions?
But there's a couple we can probably pull out. Let me just scroll back.
Yeah, I can't see them.
One thing I'd like us to perhaps finish on, Fiona, is we're stuck. This is the first day of the month of lockdown. And you've said that you are setting yourself outcomes for the next month. What would you encourage people to think about for this next week before our next Thursday chat with you? What would be a good thing for them to be thinking about for this next week about managing their businesses in the
I think they should be going through their business and being sure every element's safe. I mean, as I said, this is the month. Did you get November's rent in? You know, without being bullshit, yes, COVID is an excuse for non-payment of rent, but is it? I mean, really, self-employed are getting access to a grant. Other people, you know, can apply for universal credit. Another thing that's been sort of on my mind, I guess, is it seems like it's an all or nothing. When people struggle with COVID now, they don't pay the rent in full, nothing. They don't go, I'll pay you half or pay 70%. That's another thing that I keep communicating to my team is, you know, let's work with them and say, well, can you pay something? And also, I just don't like it being an excuse for, you know, they, as I said, they wouldn't like it if they didn't receive their salary. And obviously, we're all in an ecosystem in this world. So my rent's not paid, my mortgage may not be paid, obviously it would be paid, but in theory, or I would struggle, I've got staff to pay, I've got contractors to pay, I've got to pay bills, you know. And so I would say the next week's like, you know, I mean, I'm sure people do this anyway, as a matter of course, but looking through the business, you know, if you've got empty properties, carry on working to get those filled. Someone contacted me in April on her knees. She had a small HMO business, literally saying, I've got empty rooms in my HMOs. And I said, get those rooms rented, you know, get that income in, hustle, come on, you know, get the head out of the sand, get out, you know, get those rooms rented. Just work your plan. Get everything that's empty or coming empty on Open Rent or Rightmove or wherever you advertise. You know, if you've got financial issues, take the lesson and then say, right, going forward, what am I going to do? What costs can I cut? What optimizations can I make? You know, can I subdivide something and rent the two parts out? Or where's demand? I mean, I'm seeing demand for small offices because people are downsizing. You know, do I need to act, you know, it's being in a community is so important right now. Connection and being part of these wider communities. So one of my other tasks that I'm working at the moment is alternative sources of growth capital in my business. So because I'm seeing a lot of opportunities out there, and I want to be able to, you know, access those opportunities. And I'm also concerned about access to mortgages and things like that if things get tough. You know, I like to have multiple options. So I'm working with, I've got two new board advisors starting. And that's what we're focusing on. We're going to focus on alternative growth capitals for my investment company. And that's one of my other, you know, so banking relationships improved, change my banking relationships, alternative sources of growth capital over the next, say, 12 months, 24 months. I might tap into some of my current money partners that lend me money, asset-backed security, see whether they've got additional funds they want to lend me, so raise additional capital, access to grants. I have got a closed city centre bar, you know, we're entitled to grants. I've also got a, I was telling Karen this, I've got an insurance claim. So my sports bar, I paid for business interruption insurance for 8 years. And as many people found out, they wouldn't allow you to claim. The insurance companies have tried to wiggle out of it. They've had 4 test cases in September. The Financial Conduct Authority took I think it was 6 or so insurers to court, and they won. The customers won. And there's an appeal going through the High Courts on the 16th of November. So if this applies to you, I would, drop me a PM and I'll explain what I'm talking about. But a solicitor called me in the week and said that they've reviewed all my documents and I've got a case for a claim against business interruption. And that's quite a big claim. So, so work on that this month as well. I always got loads going on. Try to lose, eat well, keep busy, go through business, find a community, tap into the community. Is that enough tasks or do you need more?
No, that is amazing.
I'm looking at a house on Friday. Normally they go for about 220 and I've just had a call yesterday. Sellers listed it, wants to sell quickly, 185. But my question would be, is 185 the new normal, or is it discounted off a normal of 210, 220? So, that's an interesting thought. I'm going to put some thought into that. So I'm going to go and see that tomorrow. And then how would I buy it? Would I want to tie up working capital on a sort of bog standard 6% yielding single let, really? Or would I want to hold off for the even juicier opportunities that are going to be unfolding over these coming months?
Now that is awesome. Now we are just over time. There's so much still on there, so much still to discuss, and we've got a load of questions which we'll have to have a look at offline. We would like to thank everyone again for joining us, and we'll obviously respond to your questions and get back to you. Plus, don't forget to join us on the finale, which is next Thursday. So have a great Thursday, everyone, and we'll see you next week. And in the meantime, don't forget, if you've got problems with business interruption insurance not paying out, PM Fiona, as she offered, she's got some great tips that might help turn that claim around.
Thanks, Fiona.
Right, thank you. Thanks for having me.
Bye, everyone.
Bye.